Good morning, listeners, and welcome to the Trade Talk podcast. Asian stocks gained after Wall Street extended its rally. US stock futures, however, are trading with mixed gains. After the Nasdaq 100 and Dow set record heights, Treasuries rose little bit to 3.9192, and the dollar index is very close to 102 levels. However, Brent crude jumped to the levels of $79 per barrel. So while looking at the global macros and world markets, we are of the view that we should open somewhere close to 21,550 levels, and GIFT Nifty is also indicating us that the Nifty should open somewhere close to 75 points higher as compared to its previous close. Now, the strategy should be to look for taking profit if we see the market is approaching 21,600 levels. Between 21,575 and 600, the market is having excellent and good amount of resistance. So, there we need to be careful. At the same time, if there is any correction, then we should look for adding some positions. But we need to keep a stop loss at 21,300. So the ideal levels should be to buy somewhere close to 21,400, 350 with a stop loss at 21,300. But the strategy should be to look for reducing position because the markets are turning upward without any meaningful correction, which is a cause of concern. So between 21,575 and 600, we should look for taking some profit on long positions. In the best case scenario, we may even see the levels of 21,700. However, that looks temporary. Also, if we go through with the Bank Nifty, then there we saw underperformance. It was not parallel to the performance of the Nifty. It closed around 47,800 levels, which was the opening. Now the next level to watch out for would be 48,050 and 48,250. In fact, the market, the Bank Nifty is going to consolidate at these levels, and it is very difficult for the Bank Nifty to cross the level of 48,250. But in case if we see the market is crossing these levels of 48,250, then there is a possibility of hitting 48,500 or 600 mark. On the other side, 47,500 is going to act as support for it. Meanwhile, Nifty IT index was little bit under pressure, but there was some recovery towards the end. After the specific quarterly numbers from Accenture, we are of the view that the Nifty IT stocks should do well along with the performance of Nasdaq. So from here, the next level to watch out for would be 36,150 and 200. Above that, we can expect some breakout. And in that case, the possibilities of hitting 36,500 to 800 would turn bright. So 36,150 is the level above which we can expect some short covering for Nifty IT index. Now, if we go through with few stocks, then in that we saw some activity in consumer durables or FMCG companies, consumer staples like Hindustan Lever, Dabur, Marico. These are the stocks where we saw some activity. ITC was on the high side. So all these stocks should do well in the near term. That's the view because most of them are recovering from their immediate lows, and in fact they were underperformer in last 12 to 18 months. So they have not participated in the up move overall, and that's the reason we need to focus on these stocks in today's date, as we may see some catch-up rally in these companies, especially Marico and Hindustan Lever, to do well. But from other stocks, we need to focus on Infosys. There we feel that it should move towards the immediate highest levels of 1575, 1600 based on the technical formation of it. And we also like Bank of Baroda from the BFSI space. About 229, we are expecting some short covering, which may lift the stock towards 240 or 45. That's all from my side. With this, I'm ending today's call. Thank you very much for listening me. Have a great day to all of you.